Welcome to the Iraqi Dinar Update channel, your trusted source for the latest news, analysis, and insights on the Iraqi dinar. We provide up-to-date information on exchange rates, economic developments, and key financial trends affecting Iraq's currency. Whether you're an investor, trader, or simply keeping an eye on the market, our channel delivers accurate reports, expert opinions, and government policy updates to keep you informed. Stay tuned for real-time updates and in-depth discussions on the future of the Iraqi dinar. When the Iraqi government releases its new budget, a significant decision lies in the hands of Prime Minister Mohammed Shia al-Sudani, whether to introduce a new exchange rate or to maintain the current one. This decision carries profound implications for Iraq's economy, as the exchange rate is a key factor influencing trade, inflation, and the overall financial stability of the country. The current official exchange rate of 1310 IQD to $1 is the product of prior policy adjustments, but the question remains whether this rate accurately reflects the broader goals of Iraq's economic and financial reforms. The International Monetary Fund, IMF, has been actively engaged in discussions with Iraq regarding its monetary policies and banking sector reforms. The IMF's position carries considerable weight in shaping Iraq's financial trajectory, as their evaluations determine the credibility and viability of Iraq's economic strategies on an international scale. If the IMF has expressed support for Iraq's banking reforms, one must critically assess whether such support implies an endorsement of the current exchange rate of 1310 or something more aligned with long-term monetary stability and economic expansion. To understand the significance of this question, it is essential to examine Iraq's recent financial policies and the objectives of its monetary reform efforts. The Iraqi economy has long been heavily reliant on oil revenues, which contribute to the majority of government income. This reliance has made the country susceptible to fluctuations in global oil prices, leading to periods of fiscal instability. One of the key aims of Iraq's financial reforms is to diversify its economy, strengthen its banking sector, and establish a more flexible exchange rate policy that reflects real market dynamics. The Central Bank of Iraq, CBI, has implemented various measures to enhance financial stability, including increased regulatory oversight, anti-money laundering initiatives, and efforts to curb dollar smuggling. These reforms are essential in modernizing Iraq's financial infrastructure, making it more transparent and aligned with international standards. However, if the exchange rate remains at 1310, despite these banking improvements, it raises the question of whether the current rate is artificially maintained for short-term stability rather than reflecting the true value of the dinar in an open market setting. The role of the IMF in assessing and guiding Iraq's financial policies cannot be overlooked. The IMF regularly conducts Article 4 consultations, which involve an in-depth review of Iraq's economic health, fiscal policies, and monetary framework. In its most recent assessments, the IMF has acknowledged Iraq's efforts to improve its banking system, but implicit in this approval is the expectation that Iraq will continue moving toward a more flexible and market-driven exchange rate. A rigid exchange rate at 1310 contradicts the broader objectives of financial liberalization and economic diversification. A crucial point to consider is that the IMF does not simply endorse a fixed exchange rate without considering the broader macroeconomic implications. If Iraq's banking reforms are as substantial as the IMF suggests, then a fixed rate at 1310 may not be sustainable in the long run. Instead, Iraq may be preparing for a transition toward a floating or managed exchange rate system that better aligns with its economic fundamentals. This would allow the Iraqi dinar to appreciate or adjust naturally based on supply and demand, rather than being artificially held at a specific rate. Another important aspect of this discussion is the impact of monetary policy on foreign investment and international trade. Investors look for stability, but they also seek a currency valuation that accurately reflects a country's economic strength. If Iraq continues to maintain an exchange rate that does not correspond with its financial reforms, it risks deterring foreign investors who might otherwise be interested in entering the Iraqi market. A more dynamic and realistic exchange rate could signal to global markets that Iraq is serious about its financial transformation. The concept of the real effective exchange rate, REER, is particularly relevant in this debate. The REER considers factors such as inflation, trade balances, and comparative exchange rates with major trading partners. If Iraq's REER suggests that the dinar is undervalued at 1310, then maintaining this rate may hinder economic growth by limiting purchasing power and constraining the benefits of a more competitive currency. Conversely, if Iraq allows for a gradual appreciation of the dinar, it could increase confidence in the local economy and reduce dependency. It is also worth noting that the Iraqi government has historically used the exchange rate as a tool to control inflation and manage fiscal deficits. While maintaining a fixed rate can provide short-term stability, it can also create distortions if not adjusted to reflect evolving economic conditions. If the CBI and the government continue to defend 1310 without considering broader monetary objectives, they risk creating imbalances that could lead to larger economic. The question of whether Sudani will opt for a new exchange rate or continue to defend the existing one is ultimately a political and economic balancing act. On one hand, adjusting the exchange rate could lead to short-term volatility and require careful management to avoid market disruptions. On the other hand, maintaining an outdated rate could hinder long-term economic growth and undermine the credibility. Given the IMF's endorsement of Iraq's banking reforms, it is logical to infer that the organization expects further steps toward exchange rate flexibility. The IMF's approval does not equate to a blanket endorsement of 1310 as the ideal rate. Rather, it suggests that Iraq is on the right path. In conclusion, the release of Iraq's new budget will serve as a pivotal moment in determining the country's monetary future. Sudani has the authority to initiate a new exchange rate policy, but whether he chooses to do so depends on a range of economic, political, and strategic considerations. While 1310 remains the official rate for now, the IMF's backing of Iraq's banking reforms suggests that a more flexible and realistic exchange rate policy is likely on the horizon. The key question is not just whether the rate will change, but how and when Iraq will transition to a monetary framework that truly reflects its financial progress and economic potential. Thank you for tuning in to the Iraqi Dinar Update channel. We appreciate your support and engagement as we continue to bring you the latest news, analysis, and updates on the Iraqi dinar. Be sure to subscribe and turn on notifications so you never miss an important update. Stay connected with us for real-time insights, expert discussions, and market trends. Until next time, stay informed and keep watching for the latest on the Iraqi dinar. See you in the next update.